Okay, let me talk about a core technical concept which underlies a lot of technical analysis. It's not an entry-exit technique. It's just a core principle of price behavior that I think applies to futures. But the way I learned it first was, from actually from more recent books, but they were taking this concept from the old time great technical analysts and applying it to modern markets in general. A lot of those old line technical gurus have a lot of good concepts. Anyway, the concept here is that of volatility, expansion, and contraction, which you can see here. Here's an 8-period Bollinger Band. When the closing prices are getting close together over an eight trailing bars is the daily chart, the bands will come together, and as the closing prices move away from each other, the bands are going to expand. So it's kind of a good way to show a trending action versus a congestion period. Below I've drawn a histogram which shows this, right? You have low here, down here, you're starting at a low point, closes are close together, then you have a trending action as closes move far apart, volatility contracts, volatility expands, contracts. Here actually the prices are still going up, but they're going up the closes are pretty close together for a time, so there's contraction. This is the way all markets breathe. This isn't just Apple. You could draw any chart in here you want. You could draw, let's do Monsanto or Goldman Sachs. Look at the histogram on the bottom, how it moves over time, up and down. Okay. Let's look at Broadcom, Google. Okay, it's just a principle of price behavior. And let's look at Gold Corp. Up and down. Sometimes there's a lot of activity, big moves. Sometimes they're smaller. But the point is that the market's going through this period where it's choppy, trend, choppy, trend. Okay, so let's look at one more thing. Let's go back to the Apple chart, which is how do you use this? Well, now let's combine this concept of contraction. Statistical contraction. This is basically a math thing right here, right? It's taking the standard deviation and it's plotting it. Now let's look at a visual, technical, analytical technique. We'll call it. What do we have here? We have a triangle. Triangle is describing a market that's in balance. That's what the triangle does. It's really doing something mathematical, but it's doing it visually. It's showing a high or low, a low or high. You could write this into a program to look for this, but it gets tough because you have to, how many bars do you look for? The left triangles build different ways, patterns build different ways. It's easier to see this visually than anything. But you also have this fact where this is going up and down. Active stocks do this; they go up and down in volatility. And here at this point, somewhere in here, when it's getting real low, get ready for a potential trending move. What the triangle helps you do is it helps you identify an entry point, which is the triangle break. Now what? We are anticipating these closes getting farther away from this equilibrium point as this expands. We don't know if it's up or down, but you've created a situation where if you buy this break and those closes are up, you're going to make a lot of money. If you buy this and it fakes up and it fails, called a bull trap, you're going to lose a little bit of money because you can put a stop here at the equilibrium level, or you could, as it moves out, you could take a little piece off, a 30-year position off or something, and then so now you have a profit on partial, and now you're playing with the worst case is probably a break even. You're going to take a little loss on the other part, and you have your gain, and so you basically break even. But if it goes up, you're in a big reward situation as you play this burst of expansion. Okay, let's apply this to the futures market. Let's look at the VWAP. Nice way to look at a market that's either that's in equilibrium. Is it trading around this VWAP? Look at this is July 31st. You had a morning move down, right? The band started to expand, but it ran out of gas, and it's come building back up. Bands start to contract. So we're starting narrow. We've had expansion, contraction. Now it's getting real tight. It's building. What can you do? You can build a triangle here, right? You have a high and a lower high, you have a low and a higher low. That builds a triangle, just like in the Apple chart, right? You have a narrowing bands and a triangle. July 31st, you have narrowing bands and a triangle. Okay, what it's doing is building for an afternoon trending move. The futures market's nice because there's a time of day factor in it where volume is going to come in the afternoon in most cases in an active market like we've had. Sometimes the market can just go dead, but this is true to all futures markets, not just the S&Ps. We're just looking at the S&Ps. So here you had a triangle, and that sets up this trending move down, and you have a real big move. Look at this; it never comes back to this VWAP level. It just comes down. It builds some patterns along the way, and we can talk about those in a later video. But right here, I just want you to see this concept of volatility. Here it expands, here it contracts, here it expands big. That's really what I want to convey in this first video.